Hey everybody, welcome to Navigating Real Estate Turbulence. I'm John Lafferty with Century 21 Town & Country.
And I am Tony Abate with Ross Mortgage.
So today we're going to talk to you about the mortgage pre-approval process, some of the myths, some facts that you need to know about the process, why it's there, and what the benefit is to you when you're ready to purchase a home or a condo. I'm kind of going to interview Tony today just on the process. I'm going to ask him the hard questions for you. I'm not going to let him skate or off the hook. We're going to hold him to it. So with that in mind, Tony, when a buyer is starting out and they decide, okay, yes, I want to start down that path of purchasing, from the standpoint of, I don't know my credit. I'm a first-time buyer. I've never had to pull my credit, so I don't know what the score is. I don't know any of that. Do I still want to reach out to you as a lender and just to see where things are at in the process? That's literally the first step. And then I guess part B of that question is, how many points is my credit score going to go down when you pull my credit to actually approve me for a pre-approval?
Yeah, that's a hot button topic for sure. I think the first thing that I'll say though, John, is that on the surface, the whole conversation about, hey, a mortgage pre-approval, not a very sexy topic. I mean, it's kind of like going to the dentist. You know you got to do it. You'd rather not, but you know the outcome's going to be good if you do it.
Well, unfortunately for most buyers, is they don't see you on Zoom wearing your sexy outfits.
That's true, they don't. But here's the other part of it too. In this market that we're in right now, where you have to have your guns loaded as a buyer to navigate, because the sellers are calling the shots, right? And so if you don't have your pre-approval aced and in place and ready to go, you're not going to win those home purchase battles that you run into. It's really tough right now, so you gotta come in armed. To answer your question, though, especially in this market, the first answer to the question as far as when and how, it's the sooner the better. The cost of a conversation is nothing. It's so important to find out, number one, how the mortgage process works, but also, two, how does that dovetail into an individual's financial goals and expectations? Because, and we'll get into this, I'm sure, a little later, there's two things. It's how much a person could get pre-approved for, but then it's also how much do they want to get pre-approved for? Because people are doing much better now than 10 or 15 years ago as far as making these financial decisions and making sure they don't get themselves into trouble. Boy, on the topic of the credit score, such a hot button item. It seems to always come up. And why does it come up? Because there's tons of articles on the web and in blog posts and whatever saying inquiries are the kiss of death and they're just going to blow your credit score to smithereens. And it's not true. It's just not true. So I'll speak in general terms. And that is because the way a credit event affects my credit is going to be different than it might affect your credit, because all of the data contributes to scores on a monthly basis. But in very general terms, if somebody does an inquiry for a mortgage, maybe 3 to 5 points to their credit score. So I would submit two things. Number one, it's necessary evil. If a lender's going to help you out, they got to look at their credit report, your credit report. And number two, a 3 to 5 point hit to a credit score is not terribly meaningful unless somebody is right on the cusp where that hit to their credit score would make them unfinanceable. And I would submit if that's the case, there's probably other issues beyond an inquiry that need to be addressed.
So if someone's at a 741 credit score and they're going to lose 3 to 5 points, does that affect the rate?
It could. It could.
Okay.
But you know what? Here's the thing. If you never get to that point, you're not going to get any rate at all.
That's 100%.
So
100%
the transaction only matters if it closes, right?
Well, and let's be honest, too. Somebody calling you up and says, hey, my credit score is a 740. What kind of rate can you give me? Mm-hmm. That's a dead-end conversation, right? Because you need to look at their credit.
Absolutely it is. And here's another really important thing. A credit score is not always a credit score. And at last check anyway, there were at least 39 different iterations of credit score models that are out there in the ether. That's the credit score that we see. It's Credit Karma. It's the tools through Equifax. It's the tools through a person's Discover card. And all those things that allow us to look at a credit score. The unfortunate thing is a credit score is not the credit score. And very rarely is the score that a consumer sees the same thing as what I'm going to see. As lenders, we're bound to use a very specific version or model of the FICO score, and it's rarely the one that's available as a consumer. So they may see the 740, I may see a 732 or a 752. It's going to be different. Doesn't mean it's not useful information, because what is beneficial is that they're going to trend in the same direction. So if somebody is leading up to that home purchase scenario and they're wanting to do the right things to manage their credit, if they're seeing their scores go up, then we would see a similar change in their credit profile.
So what do you typically need from a potential buyer in order to generate, let's say, just a general pre-approval? Is it just the credit score? And then to do the full-blown, or do you need to verify income, verify money in the bank? Do you need to do all that to generate a pre-approval for Ross Mortgage?
Yeah, well, let's talk about sort of an unfortunate dirty little secret in the industry, and that is the fact that the term pre-qualification and the term pre-approval is not things that are defined by regulation as to what they mean. So the way that Ross Mortgage looks at a pre-approval could be very different than the way that that another lender defines pre-approval.
Spaceship lending?
Yeah. It has something that might rhyme with socket, that they might do it a little bit differently. But so let's talk about some things relative to that. In our world, a pre-qualification, it's really a conversation. And so it's not like it's a meaningless tool. It's a great place to start. But basically, a pre-qualification is when somebody tells me, hey, this is what I make, this is what I have in the bank, and these are my liabilities. And from that, I can do the math to say, well, based on this, you qualify for X. And so again, it's a meaningful starting point. It has no validity in the form of a letter that a seller should use to accept an offer or to decide about accepting an offer, because nothing's been verified. So that's pre-qualification. Mm-hmm. Now comes pre-approval. With Ross Mortgage, we treat a pre-approval as if it's a full-blown mortgage application, except there's just not a house available yet to look at. Okay, so they're doing this early on. Consumer knows they want to buy a house. They want to be prepared. They haven't found that house yet. They complete the application. We can help them with that. It can be done online, over the phone, in person, if someone is comfortable with that during COVID here. And then we're going to hit them up for all the necessary documentation. We want to see those pay stubs. We want to see those bank statements, the W-2s, and of course we're going to run the credit. We're going to use the automated underwriting tools to make sure that their financial makeup will qualify them for the loan that they're seeking. It's work. It's work on that consumer's part, but it's for the right reason, right? And it goes back to what we talked about earlier with regard to the importance of being as prepared as you can to be a buyer in what is a strong seller's market right now. And I would submit that if a person doesn't want to do that, that as realtor, that kind of gives you an indication as to seriousness. If they don't want to be 100% sure, then maybe this isn't the time for that buyer to be in the market. So there's a couple things, John. We're going to look at that credit score. We're going to use the automated underwriting tools. We're going to do a full financial review of what's going on with them. But then the other important part is that we're going to have a conversation. And we're going to say, what are you looking to accomplish? What's important to you? Do you need to keep that house payment at or below a certain level? Do you need to keep that out-of-pocket expense at or below a certain level? Because, and you hit on this before, John, just because I say somebody can afford a $400,000 home, if the monthly payment that is important to that consumer is commensurate with a $300,000 home, then that becomes the important number. And then my $400,000 number, it's really just a reference point. So we work with that consumer on making sure the pre-approval not only can ensure that they can get the financing, but it fits with what their goals are as well.
Okay. Now let's take everything that you just said and let's apply this to the real world. So I will tell you, as somebody who's listed homes and had buyers, the importance of a pre-approval, especially when you're on the listing side, when you're looking at an offer, is very important. And sometimes who your lender is important, because most listing agents who have been around for a while know, generally speaking, which lenders pre-approve, who have actually seen documentation, which ones have a habit of not doing that and reviewing documents closely. And so one of the things that a listing agent, when they have multiple offers, will in fact do is call each of the lenders for each buyer to, number one, have a conversation, just verify what they're looking at is correct. But number two, also ask the lender pointed questions. Now, lenders can only share certain information. They can't talk about personal finances and other things about their client. So you, as a buyer, you don't have to worry about that. But as a listing agent, you're asking certain questions to that lender because you want to get a feel for how confident that lender is about that particular buyer. So the importance of having a lender who not only can say, yes, I verify this, and yes, and yes, and yes to these other things, but who can help sell you as a buyer. Having that lender as an asset, and not having a lender when you call them up as a listing agent and say, hey, I've got a pre-approval here. Could you tell me a little bit about Joe Smith? And the lender says, who? And believe me, that's happened because some of these big lenders, you disappear. You're just a name. Oh, hang on, let me pull up my computer, or hey, let me call you back. Some lenders don't even answer their phones because they got to go run to their file and look up and who the heck you're talking about. Having dealt with Tony, the personal touch here is important, and it's one of the things about, you and I have talked about local lenders before, but it's really an important thing when you have a lender that you can actually have an established relationship with. The importance that plays when a listing agent calls and says, tell me about this buyer, he not only can tell them certain things about you as a buyer, but also sometimes just adding that human touch of, gosh, this buyer, they're great people, and they were spot on when I asked them for information. They responded quickly. I think they're going to be great buyers. I know they're really excited. Those are things that a lender who has a personal touch can add to something like a conversation with a listing agent. And sometimes that's all it takes for a listing agent to feel good enough to say, you know what, I actually think if I work with this lender, it'll probably be a smooth transaction. So I'm probably going to favor that and tell my sellers, this is the one I favor. Ultimately, it's the seller's decision. But little things like that go a long, long way. So when you're thinking about choosing a lender and you're online and thinking about going through an internet lender or a behemoth where your processor is somewhere in Asia, those things absolutely can hurt you.
Yeah, it's a big deal, and I can't stress enough, in a seller's market like we're in right now, a buyer needs every advantage that they possibly can. So call it tough love, if you will, but when we put that home buyer through the paces early on, and we have to tell them, yes, I know the fun part is looking at the homes. I know the cool thing is looking at the finished basements, but before you do that, you got to get me those pay stubs. You got to get me those bank statements. You got to get me those W-2s. It's super critical. It can make or break the deal being accepted, like you said. So most of the conversation that I have throughout the course of the week is of course, with home buyers and home buyers agents. But very often on the weekend, it's the listing agents that I get the phone call from. And I want to have positioned that buyer in such a strong way so that I can hold my head up and tell that listing agent, absolutely. We have put this individual through the paces. We have vetted their credit. We have vetted their assets. We have vetted their income. They can qualify with no question on this transaction that's on the table here. And everything's been documented too. And you're right, we can't give out that non-public information that goes along, and we would never do that. But yet we can give that confidence hopefully to the listing agent. So the listing agent can go back to the seller and say, you know what, all these offers are close, but I think you should select this one because this one seems to have the highest likelihood of reaching the closing table. Let's look at the other reality. I was being somewhat facetious before, but the best offer in the world is meaningless if it never gets to the closing table.
100%.
Right? Yeah.
You're absolutely right.
Mm-hmm.
And so the lender absolutely plays a part in your offer getting accepted.
Yep. Yeah, you can't start too soon. There's no starting too soon with that sort of thing. So it's like training for battle. You can't enlist in the Army on a Monday and then go to battle on a Tuesday. It takes some time for that sort of thing to happen. So the advice to buyers is get ready, ask the questions, learn as much as you can about the process and what your mortgage is going to look like. So when you do have to make that, let's face it, that really quick decision on making an offer on a home, you know exactly how things are going to look on your end as far as your payment and your out-of-pocket expenses.
I'm curious about the mortgage application. Is there a cost for a mortgage application, and what is that typically?
Sure. There's not with us. And I would say that most lenders are in that place, but not all. It's a very fair question. So we do a pre-approval, and there's costs to us that are, we have to involve, our time and our technology and the cost of the credit report and so on. And if the transaction never closes, well, then that's the cost of doing business for us. So, but we would not want to have cost be an impediment to a buyer to start that pre-approval process. So no, the cost is the work involved to help us develop a proper file to give them a good solid pre-approval.
I didn't know that.
Yeah, no cost.
So Ross Mortgage is like a realtor. You don't get paid until the end.
We don't get paid till the end. That's right. And we don't get paid unless it ends. That's important, right?
That's right.
So,
yeah. We're very similar in that regard.
We absolutely are. We've all got the same goal, right? We all want to show up at the closing table with a successful transaction.
Yeah, that's right. On some of these lenders, they charge these mortgage application fees. Yeah. Sometimes you'll have buyers stall and not fill out the application. They're under the perception that they have to pay, and they don't want to have to pay twice. No, it's good to know, but that Ross Mortgage doesn't charge that.
Right. And unfortunately, there are lenders that, because let's back up a step. When a person's pre-approved, they're not committed to a given lender. They still have the free reign to shop and do all the due diligence that a home buyer should do. So unfortunately, what some lenders will do, they'll impose that fee for a pre-approval on the hopes that client won't drift. And, does it work? It probably does in some cases. It's not something that we do, nor do we believe that that's an appropriate course of action. Again, the cost is the diligence on the buyer's part to get their financial documents to us, let us evaluate them, and have a good productive conversation about what their goals are.
Anything else we need to cover about pre-approvals that you'd like people who are thinking about buying that maybe you think they should be aware of heading into the process?
Yeah, just a couple things. First off, much to your point earlier when we're looking at things such as online lenders, and that is, be wary of taglines such as instant pre-approval. That should be a red flag to somebody because, again, unless they're truly looking through the financial documents for that home buyer, how can they issue that instant pre-approval? An analysis is necessary to make that happen. So that's one. The other thing is you should have an exercise with your lender in that pre-approval process where we're reviewing hypothetical estimates of a home purchase. It's more than just the letter that says you can get the financing. As a home buyer, you need to know what that transaction is going to look like. And so what I encourage home buyers to do is create a hypothetical transaction to say, hey, if you bought a home for $250,000 and the taxes are $3,000 a year and you want to put 10% down, what does it all look like? What are the closing costs? What are the impact of those taxes? What's your monthly payment going to look like? Or to send us a property that's kind of in their sweet spot. Hey, here's 123 Elm Street. This may not be the one that we buy, but we're looking at homes like this. If we bought it, what would it all look like? That's so important. I would tell you that not all lenders do that. And then what happens? The contract is signed. There's some momentum behind the numbers, and it's too late. If that home buyer is surprised by the out-of-pocket costs or the monthly payment, now they got to make a tough decision. They're in that transaction. They're committed, and so on. And so one of the important outcomes of a pre-approval is that sometimes we have to agree it's not time yet. It's not time. So when a consumer is learning about the process and they find out that closing costs and taxes and insurance can add thousands of dollars to their out-of-pocket expense, they wouldn't necessarily know that, and it's not their job to know that in advance. That's what we're here for. But sometimes when they do learn that, they decide, you know what, maybe we better tap the brakes. We got to save a little money. I would rather have a home buyer wait and feel comfortable about it than have to try to scramble and figure out a way to have the transaction close when they're surprised by how the numbers look.
Does it irritate you or bother you when a buyer client reaches out to you and says, Tony, we're looking at this house. Can you give me an idea what my numbers will be?
No. My goodness. I prepared 3 estimates before I left the office today for a home buyer who was just doing that. We want to see what it looks like before we make our decision. Is it work? Yeah. Is it a ton of work? Not necessarily. But the reverse is the tragedy. If they write the offer and it gets accepted, and then they look at the numbers and then they're unhappy, it's going to be real hard to make that customer happy, And so it's worthwhile to have that exercise of, get familiar with what the numbers are going to look like. Even if you don't end up buying a certain home, get a feel. Hey, I know if I'm buying between here and here, my down payment is this, I need this much money at the closing, and my payment's going to be about this. Then a buyer can sign that purchase agreement and have confidence.
So as a listing agent, if I were to say to you, Tony, your client here, Mike Smith, so they're looking at purchasing a home for $270,000. Have you run a scenario with them to make sure that that their payment on a home for that cost is something that they can actually afford, that we're not going to have a sticker shock 2 days later?
Yeah, that's a fair conversation. And of course, I have to be careful with how I answer the question. But the answer is always going to be yes, because unless... I shouldn't say that. If somebody on day one finds that perfect house and they make that decision whether or not they've seen the numbers, then that's what happens. And then they've got to manage through that. But the answer to the listing agent would be yes, we've done it on a few different occasions. Number one, the buyer qualifies. The assets have been verified to complete the transaction at hand. And Mr. Listing Agent, since we have done that, if they were not happy with the numbers, we probably wouldn't be having this conversation right now.
That's and that's an important conversation to have. So and that's an important thing as a buyer. You want to be able to go back to your lender, because let's be honest, buying a home in Ferndale versus buying a home in Clarkston versus buying a home in Macomb Township, all different taxes, different school systems. Some taxes are higher than others, and let's be frank. If somebody's typically not putting 20% down, more than likely they're going to have their taxes impounded as well as insurance, and their closing costs are going to be typically more expensive, and taxes are going to go up once the value resets. So avoid sticker shock, sit down with your lender, figure out some different scenarios for what payments could be so you don't end up with sticker shock. And a good lender like Tony is going to go through those things with you and make himself available to go through different scenarios when you find houses that you like, to be able to give you an idea of what you're looking at, so you don't have a meltdown and say, I can't afford this house, I got to back out after 2 days.
Right. And I don't think we've been in a market that has created the requirement to be so battle ready as a buyer, right? It's tough. You have to go into it feeling like you have competition, and your competition is not the seller. Your competition is other buyers that want that same house as you do. So you want to be confident in the numbers. You want to be confident in the fact that your pre-approval is going to stick. And then you have no surprises, and that helps you kind of rise above those other competing buyers, hopefully, that maybe have not gone through such due diligence, and that's really what it is. You just gotta be battle ready in this market where the sellers are calling the shots.
You've said that a few times, and immediately I thought, you know what, guys, Tony and I are your rock'em sock'em robots. We're ready to go for you. We're ready to just move ahead and throw punches and clear the path for you. That's kind of what we do. Me on the real estate side, Tony on the lending side. It really is. We want you to be as prepared as possible, and so when you're ready to make an offer, there's no surprises, there's no scrambling, last minute things, because time can be precious, especially with deadlines being set on a lot of places. You've got to be ready to go. Anything finally you want to add to this? I think we've provided some good information for them. For all those buyers out there, and let's be honest, first-time sellers. If you're a first-time seller and you've been living in your house for 3 or 5 years, boy, the landscape has changed for you. You'll be buying a second time, but things are a lot different than they were 3 and 5 years ago.
Yeah. Another episode for us talking about that aspect, isn't it? Yeah.
It certainly is. And we'll come in you'll come in blue and I'll come in red. We'll be ready to rock 'em, sock 'em.
Absolutely.
Hey, thanks for listening to Navigating Real Estate Turbulence. I'm John Lafferty with Century 21 Town & Country.
And I am Tony Abate with Ross Mortgage. Thank you.
If you have any questions or topics you'd like us to discuss in a future podcast, please leave it in the comments below, and we'll try to get to it in a future episode. Thanks again for listening.
Thank you.